Hey everyone, welcome back to Corporate Decoder, the place where we dive into the complex world of corporate filing so you don't have to. Today we're cracking open Northrop Grumman's latest proxy statement. Proxy statements can be real snoozers, but trust me, this one has some interesting bits, especially if you're curious about how much the big bosses are making and how they plan to keep the company humming. This proxy statement gives us a sneak peek at Northrop Grumman's performance, highlights for the past year, along with a look at who they want on their board of directors and how they're paying their top executives. We'll also see some shareholder proposals, so we'll understand what issues are on investors' minds. Let's start with the financial highlights. Northrop Grumman had sales of $41 billion, up 4.4% compared to the previous year. That's solid growth. Backlog, which is essentially the amount of work they have lined up for the future, hit a record $91.5 billion. They are set up to continue growing at least into next year. They also generated $2.6 billion in free cash flow. Free cash flow is the cash a company has left over after paying its operating expenses and capital expenditures. It's important because it can be used to reinvest in the business, pay dividends, buy back stock, or make acquisitions. Northrop returned $3.70 real, which is more than their free cash flow. Now, how did the executives do? Well, their annual incentive plan paid out at 148% of target. That suggests that the company performed above expectations. Let's zoom in on how the company tries to align executive compensation with shareholder interests. Over 80% of executive pay is variable, meaning it depends on performance. Stock ownership guidelines are in place with the CEO required to hold stock worth 7 times their base salary. So, at least on paper, the interests of executives are tied to the long-term success of the company. The proxy statement includes a shareholder proposal to improve the company's clawback policy. A clawback policy allows a company to recover compensation from executives in certain situations, like if there's a financial restatement. The shareholder is asking for the policy to apply to a broader range of situations, like negligence, and to require the board to publicly explain any decisions not to claw back compensation. Northrop Grumman's board is recommending against this proposal. The board argues that the current clawback policy is already comprehensive and that the shareholder proposal is unnecessary. They believe it could also lead to unintended consequences, like discouraging executives from taking risks. Let's move on to corporate governance. The proxy statement lists the members of the board and its various committees, such as the Audit and Risk Committee and the Compensation and Human Capital Committee. It also discusses the board's role in risk oversight, making sure the company is managing its risks effectively. The company currently combines the roles of chair and CEO, with Kathy Warden holding both positions. They do have a lead independent director, Madeline Kleiner, which is important when the same person is chair and CEO. The lead independent director helps to ensure independent oversight of the board. It's very clear what is the role of the board in overseeing enterprise risk management, including who is in charge of what. All of this helps to ensure that the company has identified significant risks and is effectively managing them. It also helps to ensure that the company has a comprehensive enterprise risk management process. The skills matrix lists a wide array of backgrounds and experience of the board. It seems like they're going for a group with financial expertise, risk management, and tech, not just military minds, which makes sense given the business landscape these days. Let's take a quick look at how the directors get paid. They receive a mix of cash and stock awards with an annual cash retainer of $482,500. Directors are also required to own a certain amount of company stock, aligning their interests with shareholders. The company has policies in place to prevent insider trading, hedging, and pledging of company stock. These policies are designed to protect shareholders and ensure that executives and directors are not taking undue risks or profiting from inside information. Finally, let's look at the CEO pay ratio. For 2024, the ratio of the CEO's annual total compensation to the median employee's annual total compensation to the median employee's annual total compensation was 220. Useful to understand the general wealth gap. Digging into equity grants, both the 2011 and 2024 long-term incentive stock plans are in play, setting the stage for how executives receive stock-based compensation. It is an indication of the structure to give out incentives. Okay, time for my take. Northrop Grumman is a beast in its industry. Financial results look pretty great, but it's worth remembering that most of its sales come from government contracts. That means it's less exposed to consumer behavior, but very exposed to politics and those relationships. This reliance makes it very dependent on stability in that environment. On the whole, the numbers look solid and the people on the board seem qualified to do their job. I'd say Northrop Grumman is steering a steady course. The key is to watch how they navigate those risks and turn challenges into opportunities, because at the end of the day, the market cares about sustainable growth. Thanks for watching. If you enjoyed this decoding, please like this video, share with your friends, and subscribe to our channel for more deep dives into the corporate world. Let me know what reports you want me to analyze next.